So by now, many of us are preconditioned to rinse and repeat the following phrase: buy the dip. Stocks go down, buy the dip. Market corrects, buy the dip. We see any red, buy the dip. Any weakness, buy the dip. So it's pretty clear that a lot of us understand that when stocks go down, the price moves down, but the business still stays strong. That's a buy the dip opportunity. However, when push comes to shove, I know a lot of people kind of double guess themselves. They contemplate whether they actually do want to buy in. They're like, oh, maybe I'll wait for some lower prices. And guys, let me just tell you this. In a bull market where stocks trend higher and higher over time, waiting for huge corrections typically is a losing game. Sure, we had a massive correction in 2020, but before that, the last real big crash was in 2008, 2009, right? So people were waiting for over 10 years for a big crash to buy in, and when it did crash, it was still significantly higher than where it was before. That's not to say that we can't see another 2020-like crash sometime in the near future, but all it means is that when stocks that you want to buy are showing a value, it's typically a good time to start nibbling. So hopefully you didn't just sit back today, watch the broader market kind of go down 2% in a single day, which is something we have not seen in a while. And then if you looked at your individual names that you're probably holding in your portfolio, a lot of them were down, 4, 5, 7, 10% today. If you just sat and watched that go by, maybe you need to reevaluate whether you really do want to buy the dip and take advantage of corrections and pullbacks in the market. Now granted, today wasn't a day to buy every single stock out there because there were some stocks that just pulled back very slightly, but there were opportunities, and sometimes you got to seize those opportunities even if it may feel a little uncomfortable to do so. That's just my philosophy on this. That's just what I've been doing, and I think over the long term, it's going to pan out for me very well. The bottom line is, when there's fear and there's weakness in the market, we want to be out there and we want to be scooping up shares. Today, if we look, I was surprised to see that the Fear and Greed Index shows that we're sitting at a 22, even though we're only 5% off the highs here. So there is fear, there is some doubt out there in the markets. People are hesitant to buy the dip. And like I said, if you look at the broader markets, you're seeing it down 5%. You're like, what is this? Like, this is not really a dip, it's just a waste of time. But when you look at individual stocks, a lot of them have entered correction territory or very close to that, which in most cases tends to be a buying opportunity. Apple, for example, officially corrected today, down 10.25% from its highs a few weeks ago to its lows today. Facebook is another popular, massive stock out there, really close to correcting, around 9% lower from its peak. And this is another one that, if you're a strong believer in Facebook long term and you like the fundamentals, it's hard to pass up on. And this list, guys, goes on and on. In fact, about half of the stocks on the market are below their 200-day moving averages, which is typically a bearish signal and shows that there's a ton of weakness out there. So yes, the S&P is barely down, but individual companies, a lot of them, are well off of their highs. So hopefully you took advantage of some deals out there in the market today. I'm not saying, go all in, but maybe nibble here and there. Personally, I bought 2 stocks today, so let's talk a little bit about that. The first stock was Amazon, and I made quite a few purchases throughout the day today because this is a company I want to have a much larger allocation to in my portfolio. Now, I made a video on Amazon a few months ago on why I'm very bullish on this company going forward at today's prices, and I still feel that way. If anything, I feel even more convinced that this company is going to be doing some great things in the future, and at today's prices is a bargain. Amazon was down around 4% today, which I couldn't really pass up on. I had to buy some stock. And when you compare this to its other peers, other mega cap tech giants, Facebook, Google, Apple, Microsoft, whatever, Amazon is lagging behind. So here's a tweet that I sent out last week showing how far behind Amazon is, and it's the only single-digit gainer amongst its other peers here, which I think is an opportunity. I think because Amazon had such a weak or relatively weak 2021 this year compared to other large caps and the S&P, that it will probably outperform the index and these other stocks in the years ahead. And that's typically how it works when these great companies, enter periods of consolidation where everything else seems to bypass it. Eventually it wakes up, it starts moving, and while other stocks may be leveling off at that point, this one's just heading off to the moon. So I here am very bullish on Amazon. Now, if you're wondering why, I summarize this in a few points from a tweet again last week. If you're not following me on Twitter, by the way, check out the description, follow me on Twitter. But anyway, some main points to consider is that, there's an upcoming shopping season very soon. Amazon's going to dominate that once again. And they're probably going to see a lot of sales from their new TVs that are coming soon, so that'll be another good driver for them. Their next earnings report that they release will include Prime Day results, which I think would be a catalyst that people are like, yep, this company's still doing well. Prime Day was a massive success once again, and it just keeps getting bigger and bigger every year. AWS is a prime candidate here to really take advantage of the enterprise spending that we're seeing in the marketplace. Another part of their business that's massively profitable and growing rapidly. And then we have their advertising business, something not talked about a lot, but it's up 87% year over year and has no signs of slowing down. And the fundamentals for Amazon just keep improving every single year, despite what the stock has been doing. Growth in 2021 is expected to be 23% for revenue, slowing down to 18% next year, but will still mark a massive milestone for them, which is $500 billion in revenue. Their profitability is also exploding year over year, as you can see here. And this, guys, is with them not even focusing or caring about profitability right now. Sure, they're a bit more profit conscious than they were, 5-10 years ago, but they're still not in full out Apple-like profit mode where they want to make as much money as possible. Nope, they're focusing on reinvesting, putting it back into the business, and over time, eventually, they'll flip that switch to make massive profits. So it's a no-brainer to me that Amazon, with all the metrics that I see, with the business, understanding what they're doing, what they're trying to achieve, how large they are and how many sectors they're really trying to dominate, it's a no-brainer to buy it at these prices. And because of that, I've actually brought it up now to around a 5% allocation in my portfolio, which is a sizable amount of money for me. But I'm not going to stop there. I'm probably going to build this even larger if we remain around these prices. One thing to note is that on September 28th, they are going to have an event, and this could spark some interest once again in the stock. They could surprise us with something, and that could rally the stock. So we'll see how much higher the stock goes if it does, and if it runs too far ahead, I'll stop my buys. But if not, I'll continue averaging it. This is probably going to be a stock that I hold for decades to come, pass on to my kids. I don't think this company is going anywhere, and in the next few decades, it's probably going to have way more segments of the business that they're just building up today or they haven't even thought of yet that will be massive drivers of profit for them in the future. Now, that was the first stock I bought. Let's talk about the second stock, which is controversial. A lot of you are not going to like this. A lot of you are going to disagree with me on this purchase. And if that's the case, I completely understand, but I just could not pass up on the price today. Alibaba, guys, is the second stock that I bought, and it was just too cheap to pass up on, and I picked up shares around $150 per share today. Now, full transparency. I thought that the bottom for Alibaba was in a few weeks ago. I made a video on that, talking about that. I was like, okay, looks like things are getting better here for this company, for China. We're probably bottoming off, moving higher soon. Well, that was clearly not the case. Stock continued trending lower. We're hitting new lows now. We actually went below 150 today. And who knows, in the coming weeks, maybe we go even lower. But all I can really say is that these prices, it's just too tempting. If you look at the fundamentals of the business and you actually believe the numbers that they post, which I know is a sticking point for some, then this is a clear buy at today's prices. Just like how I love Amazon and everything that they're building, Alibaba is kind of a Chinese version of that, right? Like, they're doing the exact same thing, but they're valued much, 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 much cheaper than Amazon. And eventually, I think over time, once, if ever, investors get confidence back in China and money starts flowing in, Alibaba will be one of the biggest winners out of there. The risk to reward, like I always talk about in this case, just seems too compelling to me to pass up on. But if you disagree with me, I completely understand with that. Let me know in the comments down below. Even if at 150 you're like, no, the stock is not worth the buy, it's going to zero, whatever. I'd love to hear your reasons in the comments down below. But just full transparency, I did buy some Alibaba today. Now I want to be clear. I'm not going all in here on Alibaba, okay? This stock makes up around 1.5%, actually a little less than that, of my overall portfolio. Like I said, Amazon makes up 5%. So this is much smaller than my Amazon position. Still a good amount of money, but an amount that I'm comfortable losing. If I'm wrong on this thesis, if 5-10 years from now the stock is 50% lower or something like that, It's not going to make or break me. It's not going to be the end of the world. I'll be able to move on from that. But if I'm right, and if Alibaba recovers, doubles or triples in the next few years, yeah, it'll be a good sizable amount of gain that I can take and maybe reinvest into other businesses at the time. Risk management, I think, is extremely important, especially when it comes to these Chinese stocks. And that's why I don't plan to ever make Alibaba more than a couple percent in my portfolio. Even here at 1.5%, it's kind of pushing the upper bounds, but again, at these prices, I just couldn't pass up. Now, apart from these two, long-term investments that I bought stock in, I also made, over 10 option trades today that I posted in the Discord in my VIP group if you're interested. Link description down below. But I'm taking advantage of the high implied volatility, the VIX spiking, all this other fear that's out there, and I'm selling a ton of premium, which hopefully, if the VIX does contract over the next few weeks, I should see some nice profits on these trades. But trades are on. It's a waiting game now, and if we see more selling in the next few days, I'll probably put more trades on as well. So again, if you're interested in options, learning about options, especially selling options, link description down below. Join the group, which gives you access to the Discord, and you can ask me any question in there. But anyways, guys, hope this video is valuable. Let me know if you bought the dip today, if you took advantage of the volatility and the selling we saw in the market. And if not, let me know why as well. Anyways, guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one.